Welcome to our daily Forex market analysis, and this is for trading on June the 17th, 2021. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So the very busy day today in terms of the news. The most important thing here was the Fed statement, and we have been discussing the whole inflation. We have talked about how central banks will start tightening the monetary policy. Bank of Canada has already talked about that. Bank of England has talked about that. ECB decided to stay away from talking at all about tapering or increasing rates. But today, Fed actually, they talked about pulling forward when they were going to raise the interest rates. So as a result of that, so anytime there is talk about raising interest rates, that is a positive thing for the currency. So when the Fed switched, basically, so this is the first time they have actually talked about raising interest rates. So that's a positive thing for the currency. And that's why we saw the US dollar just take off as a result of that. And then we saw further movement during the press conference. Excuse me. So that's why the US dollar went up so much and everything dropped against the US dollar, because the Fed basically started talking about raising interest rates. And they also talked about tightening the monetary policy. So basically, Fed is expecting a good recovery in the economy. They think, they basically think that they will have to they have started talking about tapering, but they're not going to basically, this is tapering the bond purchases. So they're right now, they're purchasing bonds. So which means they're injecting money into the economy. And this is the first time they have actually talked about tapering that or stopping that or cutting back on that, not really stopping it, but tapering it. So cutting back on it. And this is the first time they talked about raising rates. So both of those are positive signs. And overall, they were just bullish in terms of recovery. And hence, we saw the US dollar go up. So anytime there is a talk about raising interest rate, which means the borrowing costs for businesses will go up. And that is a negative thing for stock market, but it's a positive thing for the currency. So that's what we have. Now, whether this will keep the dollar pushed up or not, we will have to see, because there will be other things that will have an impact on it. But in the short term, definitely it is a positive thing for the dollar. So we may see a bit more continuation, but keep in mind, it has also created inefficient moves, and we'll talk about that when we get to the charts. Other than that, we do have stuff coming up here. We have Reserve Bank of Australia coming up shortly, and then employment numbers for Australia. And these are expected to be better than the previous numbers. So if that's the case, we will have a positive reaction from Australian dollar. Coming up on Thursday, we have Swiss National Bank. So Swiss National Bank here, a monetary policy statement, and then policy rate and press conference. At this point, they are negative, not really expecting any sort of hikes or anything, or even talk about hikes at this point. So I'm expecting them to keep things the same. In that case, we will not see much of a change. But if they start even referencing any kind of interest rate statement or in any kind of interest rate in their statements, that will be positive for Swiss franc as well. So just keep that in mind. But I don't really have high hopes from them. They are, like I said, negative, right? Okay, so euro, we have CPI numbers. So with the euro, so CPI numbers are becoming very important right now. So if the inflation continues to go up, then the banks will be forced into raising interest rates or managing the monetary policy. So far, ECB this week kept everything the same. They didn't really want to change stuff. But if the CPI numbers are higher than this, that should push euro up, because it will mean that ECB will also have to start talking about raising rates. Other than that, we have Canadian employment numbers here. And then Philly Fed manufacturing index number and employment claims here. So they are supposed to go down. So we'll see if that is the case. And then we have monetary policy for Japan, and this would be a positive. Sorry, if they talk about, again, they are also in the negative. Bank of Japan doesn't want to raise rates. They have not raised rates in years. It has been negative, and that's why Japanese yen makes a good carry trade, because their interest rates are negative. They're technically paying you to borrow money. So this is, I'm not expecting again interest rate hike, but they can start talking about tapering the monetary policy support they're providing to the market, and that will actually be positive for Japanese yen. So we will keep an eye on that. So that is it in terms of our fundamentals here. So let's take a look at our charts. We'll start off with euro dollar. So as we can see, a huge spike here to the downside. Now we were looking for a downward move here. And as we have been talking about the last couple of days, it did hold below this previous support resistance level. But the big drop here is because of Fed statement, and Fed talking about increasing rates. So if we go down to an hourly chart here, we will see a big drop here, right? So this is an inefficient move, but when it's driven by like a fundamentals change like interest rate, it can continue. But even an inefficient inefficient move, this is called an inefficient move because it just drops so suddenly. And this one can go a little bit lower. So we'll keep that in mind, but watch out for these type of moves that any kind of sudden drops or sudden moves higher can get filled. So we are into support. So bias here is bearish, but we are into support. So this is a major support resistance level, and we have to see a break through this in order for this to continue. But what could happen sometimes is it can pull back. So watch out for that. It may just slip through and then come back. Keep that in mind, but bias still stays to the downside. So we may see a move down into 1.1940 level. We haven't seen a move back here since April of this year. So we'll see if it will come back. So bias is bearish. Target is 1.1940. Pound dollar here, this one we were also expecting a bearish move. So this one did not drop as much because basically Bank of England is also looking for, they also talked about adjusting the monetary policy, which is a positive thing. ECB hadn't, and that's why euro dropped more. So bias here is also bearish. Now watch out for a pullback into 1.4020. Level here, so it could go there or it could go all the way into 1.4035. So bias is bearish, but it could watch out for those pullbacks. And in this case, our target here will be 1.3880. So bearish bias for pound dollar as well. Aussie dollar here, Aussie also dropped. We saw that move all the way into the support here. We were looking for price to drop, but it went right through our targets. So next target here is 0.7560. Now bias is bearish, but having said that, keep in mind we are getting some data out of Australia, which can push the Australia, if the employment numbers and all of that comes in positive, it can push the Australian dollar higher. But based on the technicals alone here, this is looking bearish. So next target here is 0.7560. We are back into this important support level here. And this is where it has struggled for quite some time. So bearish bias, just with a bit of caution here. New Zealand dollar, this one as well, we were looking for a drop. We got that. And now bias is still bearish. Again, with this one here as well, watch out for price to retest. It can come all the way into 0.7100 and then drop. So watch out here. bias is bearish, and next target is 0.700. So back into this support here. So this is an important support again. So we'll have to keep an eye on it. So bearish bias. Dollar CAD here, this one went up as well. So price was into resistance and it made it through. So all of the strength is basically from the Fed statement. So this is looking bullish. In terms of a pullback, we may get a pullback into 1.2250. If we get a big pullback, then it can go all the way into 1.2200. But for now, we will keep an eye on the 1.2250 level. So bullish bias here for dollar CAD and looking for a continuation here towards 1.2350. So bullish bias here for dollar CAD. All right, let's take a look at our commodities here. Big drop in silver, and we were looking for a bearish move, but this is more than what was expected. And this is related to the Fed statement here as well. So with the Fed talking about raising interest rates and talking about cutting the tapering, the bond purchases, all of that is a bullish thing for the currencies. But bearish for everything else. So silver, US dollar went up, and this is why silver has dropped, because it's in the US dollars. So bearish bias. Now I'm looking for a pullback into the support resistance at 27.35. If it holds below, then we will look for a follow through in the other direction. But keep in mind, there are a lot of inefficient moves that have been created. So that's quite an inefficient move. So it could go up and fill that move. So that's definitely something to bear in mind. But bias is bearish at this point. We may get a couple of days of follow through from this. This was quite a big thing that they did. So this is the first time they have done it. So that's why I would look for a pullback, and if it holds, a drop here. So bearish bias, next target is 26.60, and only if it goes through that, then 26. So bearish bias for silver. Gold here, gold again did the same thing, quite a bit of a drop here. So gold is again in US dollars. So with the US dollar getting strong, of course, gold dropped here, and I wasn't quite expecting that big of a drop. I was expecting a drop, but not this big. But it went right into our previous support resistance level here. So bearish bias, but again, keep in mind, it's quite a bit of a drop, which means our pullback can be a fair bit as well. So in this case, looking for 1823 is the first pullback level, but it could go higher into 1825, 1826 level here. So keep that in mind. That's quite an inefficient move. And these moves can get filled. So I would be careful with trading any of these large moves here. So bearish bias. And next target here, first target will be the retest of the bottom at 1806 and then 1797. Oil here, oil is reacting at the top. It had been going up for the last few days, and now this is the first time we have actually seen a drop. So we just need to go back a bit. Yeah, so it went right into the resistance there, and it has dropped from there. So this is a nice bearish candle close. So we may get a bit of a move to the downside. Again, not a big candle or not a very strong momentum to the downside, but since it's gone up for so many days, we may see more of a pullback here. So 70.45 or 70.50 is the first target. And then potentially we could see a drop further into 69.20. So bearish bias for oil. Copper here, copper also dropped here. It's right into our support level. So again, bearish bias still, but now it has dropped a fair bit. And this is where we have to be careful now. It's into a strong support resistance level. This is where price has struggled on the way up, and now we may see it struggle on the way down as well. So for now, I will say bearish bias with caution though. If it doesn't go through 4.21, we are back again. So with this one, next target here, first target would be 4.21, and only if it gets through, then we will look at 4.15. But for now, bearish bias with caution. Bitcoin here, Bitcoin also dropped, and this one was into resistance already, but part of it also was the US dollar getting strong. So again, Bitcoin, this one here is in US dollar or measured in US dollar, and with the US dollar being strong, Bitcoin dropped. So we do, but as the indication was there that this is likely to drop, so this is not a surprise. Now we do have a nice bearish candle close. So looking for a further drop here. So in this case, the first target is 37,000 and then 35,600. So bearish bias for Bitcoin. S&P 500. So with the monetary policy statement, anytime they talk about raising interest rates or tightening the monetary policy in terms of tapering off the bond purchases, so not providing that support to the market anymore, that is bad for the business because now the interest rates for the business will go up. So cost of borrowing money will go up for the business. That means their profit margins will go down, which means the businesses will spend less towards investments and so forth, like investments in equipment and hiring people and so forth. So tightening the monetary policy is always good for the currency, bad for the stock market, and hence we have seen this drop. So nice bearish candle close here. Now keep in mind we are into support, so this is the support here, so that's important, but still looks bearish. And next target here is 41.65, and then below that we're looking at 41.45. So bearish bias here for S&P 500. Nasdaq here, Nasdaq is also looking bearish, quite a drop, and looking for a follow through. First target will be the bottom of today's candle, which is 13,820, and then below that we're looking at 13,700 basically. So bearish bias for Nasdaq here. Dow Jones also looking bearish here. Again, nice drop right into the support though, so watch out for that. But looking bearish, next target here is 33,575. And then DAX here, DAX, it's still holding there. And we may see it follow, we'll see if it follows the US stock market's lower, but right now it hasn't done much over the last few days, so it's neutral overall, still sitting in that bullish trend. So we may see a retest of this trend line, and if it holds, it may go higher. Right now doesn't seem to have a clear direction, so we will wait and watch this one. So right now neutral bias for DAX. And in this case, looking for a bit of a drop here towards 15,650. FTSE here, FTSE dropped a bit. It's still holding above that previous support resistance level, and now it's been going sideways over the last 3 days here. And in this case, I would look for a move towards 71.25, and if that holds, we're likely to see a move higher here. So overall, the bias is still bullish. So looking for a bit of a drop. And then if it holds there, we will look for that continuation higher. So bias here is neutral to slightly bearish for FTSE. So 71.25 is the first target. And then 70.65 is the second one. And then we have Nikkei here. Nikkei also looking a little bearish. It hasn't been able to go through the resistance. And with this one, it's into support. And if it continues on, we're basically back into the bottom of the range here. So target here is 28,750. So neutral to bearish bias here for Nikkei. All right, so that's it for today. You guys have a wonderful trading day, and I will see you guys again tomorrow. Bye for now.